Stocks having a little trouble starting here with pressure on NVIDIA, semiconductors, and big tech. Let's go over to the consumer where you got Dollar Tree up 3%. Tom White looking at the options, and Stosh Graham joins us from Graham Capital Wealth Management Managing Director. Stosh, Dollar Tree getting rid of Family Dollar, is that overdue?
Long overdue, and you figure that this process has been expected for close to a decade. I would say certainly the last 5 years. I know there's been some early reaction to the price point, just over $1 billion. 2015, they acquired Family Dollar for close to $9 billion. So you could see over the last decade what has really happened to the scope of the discount retailer.
So what do we learn from that? Because I've heard rumors that there might still be consolidation within this category, and I'm not really sure what the plan is, because it seems like Walmart and Amazon and Costco are just getting more and more of the consumer, and these dollar stores kind of getting left behind with like a massive physical footprint to deal with.
You're absolutely correct. I think in regards to the larger discount retailers, you mentioned Walmart, which, when you look at the sector itself, Walmart, what have they done? Well, over the last decade, they have put a significant amount of capital in e-commerce, which again just increases the base of consumer that they can market to and ultimately generate business from. I think internally, and maybe it's apropos the segment being called Inside Out, I think internally you have a new management team for Dollar Tree. They're having to make up for maybe incorrect decisions. We could say that with hindsight, incorrect decisions of management of the past few years. This transaction, while it might not be the dollar figure that people were expecting, is going to allow Dollar Tree's new leadership team to have over $1 billion of capital to help fight the tailwinds the company's been navigating, really the sector in general, though. And I think, again, mentioning Inside Out, when you look from the outside of the company and you look at the sector in general, there are multiple tailwinds that a lot of these discount retailers are having to fight. And now Dollar Tree's management team is going to have over $1 billion in cash to be able to invest to try to counteract as best they can these tailwinds.
Any obvious places to put that money?
Yes. So we know inherently this is a very tariff sensitive industry, Dollar Tree, Dollar General, all, because they import their goods, the vast majority of their goods. So you saw in the press release, in the statement from management, they've already made corrective measures for this year. They're going to be able to put $1 billion, at least some portion of the $1 billion, to help with their supply chain. Certainly that will be an effort to help protect margins. You're going to see strategically, and they've been doing this over the last year or so with their stores. Their footprint was massive. They've closed some locations. They're going to they're going to sell off some locations. They're going to open new locations this year. They're going to be able to use a good chunk of that $1 billion for new locations. But I think, again, when you look at the sector in general, this isn't just specific to Dollar Tree. You're having to navigate how are you going to compete with the larger discount retailers that have a larger variety, larger selection of price points for goods, and separately, how are you going to manage your supply chain? Walmart, the behemoth industry, has fantastic supply chains in addition to e-commerce and a wider variety of products. So Dollar Tree, while it's not an apples to apple comparison between Walmart and Dollar Tree, but again, at least this is going to allow Dollar Tree's management team to invest capital without stretching their balance sheet, which has been a solid investment grade balance sheet for several years now. But it's going to allow them to try to compete maybe against the Dollar Generals of the world.
All right. It seems like on the margin, well, I mean, I guess I don't want to lead the witness, but if I am an investor who wants exposure to kind of a discount or a staple, a reliable consumer stock, it just seems like still it's hard to argue against the money going to a Walmart or going to a Costco. And I guess it's part of the reason why the dollar stores have been down a lot. But could we possibly be at a fulcrum where, the value trade-off down here makes some sense if the balance sheet is high quality still?
Perhaps. Dollar Tree, in fairness to Dollar Tree, they're very uncrowded. You look at the history of this stock as a publicly traded company, and there's several variables that we monitor to to put together a equation to determine whether a stock is uncrowded.
Okay.
This is, for our metrics, the most uncrowded this stock has been in the history of its company. Active fund managers have been, and again, this isn't specific to Dollar Tree. You could apply this to Dollar General and other or other discount retailers. But it is very uncrowded. And what we have found through our review and throughout history, that uncrowded stocks react less bad to bad news, and they react great to even marginal to good news. And I would say the earnings release today is really indicative of the latter. It's a fine release. They made a sale. They have capital. There's still structural issues with their space, because when you look at the bottom line of where this company is going to go over the intermediate term time frame, it's going to be how is the majority of their consumer base. And we know that makes up of middle income, lower income households that are still struggling. And I'm not necessarily too sure what the tailwind for those households are.
Okay, really great stuff. Nailed the question there with the crowdedness, exactly what I was going for. So maybe some opportunity, tiny little bit possibly, just in the fact that everybody hates it. Thanks, Dash. Really interesting take.
Absolutely.
Tom, give me a trade. What do we got in Dollar Tree?
Well, stock traded down to 65, so it was actually negative for a bit post earnings and post the spin-off of.
It's doing okay now.
Yeah, not doing too bad. At about 70. So I just looked at something with duration. There's not a lot of option premium in here. We've seen that vol collapse in this stock post earnings. So looked at something directional that's going to cost me less because implied volatility levels are down. So going out to the May monthly cycle. So 51 days to expiration. I'm going to buy an in the money, $5 in the money, the 65 strike call. Then against it, with the expectations, hey, maybe it goes up, but not a lot. Doesn't have to go up a lot. Sell the 75 strike call, so a bullish $10 wide call vertical. Pretty aggressive here. You're paying roughly about, I've got 360 debit on here. It's trading closer to $5 now because the stock has rebounded. But even if you pay a $5 debit for this thing, your break even is right where the stock's trading right now. So you don't really need that big of a move to the upside here if you pay $5 with the potential to profit $5 if it goes back above 75 over the next month and a half or so. So this might be the way to play it, where a low volatility environment gives you that ability to hey, if the stock's going to go up a few percent, I want to take advantage of it. I want to define my risk. This is a way to do it.
Okay. All right, seems reasonable.
Yeah.
I don't hate the idea of taking a shot in an uncrowded trade that just dumped a massive weight off its shoulders with Family Dollar.
That's been the drag on them for 2 or 3 years, yeah.
Okay, so call vertical for Dollar Tree, but maybe if you're looking for something more reliable, let's go to Walmart. How do you get a trade there?
Stock
likes Walmart.
Stock's pulled back, 19%. 19% from its all-time highs of above $105 a share. Pretty good earnings report. They gave some softer guidance for this quarter. I think a lot of retailers did, just based on the post-holiday blues, the new administration, the uncertainty that we're seeing with consumer sentiment and confidence. But stocks pulled back nearly in bear market territory. So I looked at something a little bit more aggressive in here, but still staying risk defined. Going out to that same May monthly cycle, so 51 days to expiration, where I'm going to buy a ratio call vertical here, where I'm going to buy 2 of the in the money 80 strike calls and then sell 1 of the 85 strike calls in May. So you've got 51 days to expiration. You'll pay about a $10 debit for this 2x1 call vertical here. And if you pay a $10 debit, anything above the 85 strike is going to be profitability on this one. So it's relatively aggressive. You can see here from the risk profile, you're still risking $1,000, right? Because you're paying a $10 debit. And that's your downside below that 80 strike, right? But at $85 and above, your profitability is infinite to the upside. So if you think there's going to be a rebound in Walmart, and this is going into earnings also, so you might have that as a catalyst to the upside if people start picking up shares of some of these retailers that have been beaten up.
I see. You're going way out there to mid-May for the earnings. Mm-hmm. May 15th or 16th?
Yep.
15th?
And 16th, yeah. Earnings are the day before, I believe.
Walmart holding in at $85, pretty good.
And it's right there.
I kind of feel
break even's right there.
Yeah, it's pretty range bound here.
Yeah.
The Iron Condor has been the trade that's been working in Walmart.
Yep. Just over the last month or so, yeah.
Yeah, all right. Stable. Thanks, Tom. Appreciate the trades there. 2 bullish trades in the consumer category with Dollar Tree. Kind of a surprise winner on the day.